Thank you very much indeed, Ayu. Welcome to this afternoon's panel, exploring the role of AI and machine learning and the role it can play in helping to understand the rapidly evolving economic and financial landscape. In the Biz Innovation Hub, we think about an experiment with AI and machine learning, particularly under the umbrella of SupTech and RegTech. And one of the things we observe, and we've just heard it echoed so eloquently on the previous panel, and it is not unique to AI and machine learning, but it bears repeating, is that it takes a community, inspiration from academia, expertise from the private sector, the opportunity and the appetite from the public sector. And we just heard something from Stefan, particularly on that need for that blend of collaboration. Today's session builds on what we've just heard, but it's also an important counterpoint to the conversation we heard yesterday on AI and ethics. So I am delighted to be joined by two very distinguished guests this afternoon. Dr. Daniel Barajo, a research director at JP Morgan AI Research. He is also a professor at the University of Madrid, and he has had 35 years of experience of work on AI from the research side, as well as developing AI solutions for companies. And from Frankfurt, we are joined by Paolo Cironi. Paolo is a global research leader in banking and financial markets at IBM, the Institute for Business Value. He is a former startup entrepreneur and quantitative risk manager in investment banking. He has published extensively on fintech innovation, quantitative finance, and banking practices. A very warm welcome to you both today. Ahead of this summit, you in the audience, you online, might have taken part in a survey we did. And we asked you about the role of artificial intelligence and machine learning. And 70% of our respondents from that survey believe that AI and machine learning will become significantly and widely adopted in financial industry in 1 to 3 years, and more than 95% of you expect that it will be prevalent by 2033. So, Daniel, if I can come to you first. We've heard a lot about AI and machine learning. We've heard a lot about it in the previous panel. We heard a lot about it yesterday. Can you talk to us a little bit about what you see as the true potential of AI and machine learning across the financial sector?
Sure, thank you. So first of all, thank you for the invitation to be here. So let me start with a very short introduction to AI in terms of story. So from if we see the evolution of human story with respect to tools, we see that we first addressed the problem of dealing with the physical world. We were not very good physically to deal with waiting, moving things around. So we invented tools and machines that would help us to move around the world. So we have cars and we have airplanes that allow us to move around. So in the early days of computer science, we started looking at machines that were able to help us with not with the physical world, but with the mental world. So they were able to do numerical computation for us and some other tools that were developed over time. But it was, from the beginning, it was quite hard to deal with all the tasks that we as humans are able to do, like reasoning, learning, interacting with the world, understanding the world. So we have seen recently a huge advance on those topics coming from AI. So I would say that the potential use of AI and ML within not only the financial institutions and central banks and commercial banks, it's everywhere. So if I ask each one of you independently, what do you do for a living? What are your daily tasks? Well, I mean, I'm sure that I will find, I'm not saying 100%, but I would say that a huge percentage of our time, it's devoted to things that can be easily, mediumly easily, probably medium or long-term computable by a machine. So the range of applications is obviously huge. So, I mean, if you want examples, we could go from strategic reasoning, which accounts for long-term planning, that we can use, for instance, agent-based simulations, and some of these issues have been discussed within this forum, where you can try to at least see different scenarios that could happen in the world and how those scenarios can impact the risks and how we interact with the world. So I'm not saying that we are going to predict whether a war is going to happen, but we could explore the effects of those events in the world and try to be prepared to those events. So in terms of, and the machines are very good at combinatorial optimization. So they are very good at letting them run for some time, as much as we want, and then let us explore all the possible scenarios that could happen. From a tactical point of view, we are already seeing the revolution, not only since 2010, when the first deep neural networks approaches arrived, but also from the early times in AI, in the 50s, down to the latest revolution that we are seeing these last days with the publication of GPT and BART today or yesterday from Google. So we are seeing that all these tools will be able to help us in our daily life, doing reasoning, doing learning on the environment, and making decisions as humans. So they are going to help us on trying to solve those tasks.
Thank you, Daniel. And that was an incredibly helpful kind of contextualization of what we mean when we talk about AI and machine learning. And Paolo, maybe I can come to you and ask you where you see it being utilized effectively in the central banking community. Where does it add value for you from your perspective, and for whom?
That's a very good and broad question. So I will start mentioning a recent paper that was published by the research unit of the European Central Bank titled Financial Intermediation with Technology, What's Old and What's New. Because what the ECB researchers said 3 years ago is that financial intermediaries excel market power if they are strong in information and communication. And I believe the understanding of what communication and information is at the intersection with AI machine learning is the way for us to understand and to direct us into this conversation, which I actually made them also the axis of my banking innovation quadrant that explains on one side how commercial banks can excel in information and communication to create with data and AI new business models, and at the same time here at the conversation, how central bankers and supervisors can excel in information and communication to better interact with the system, the financial system, and beyond its borders, the whole economy. So now, what is better information? Well, I would say it's a couple of things. Is learning how to trust granular data and learning how to embrace openness of data across ecosystems. So AI and machine learning come to use when supervisors now are in need to detect outliers. We know that financial markets has always been fast. They're getting faster and faster, and we saw the unfolding of a crisis a few days ago. So it is important to create analytics in a way that the supervisors at the central banks can relate to real-time data in the understanding of how the structure of financial markets is basically changing. But this is also about detecting the emergence of the new trends. I try to speak like a regulator, or a central bank, and using words very cautiously. I didn't say predict, because I don't think that markets can be predicted since they are open by definition, being biologically grounded. But definitely, there are trends, there are moments of arbitrage opportunities, which can also be the starting of a crisis. And that is where AI can add value by assessing the different relationships in a huge amount of data sets, which is also formatted data sets, in order to bring those trends to the surface and make the understanding available to those who need to act, to relate and to protect the stability of the financial system. But there's another important element which doesn't touch necessarily the macro and macro, if you like, activity of central banks. It, if you like, helps in terms of their activities when it comes to the supervision of financial institutions. There's a lot of financial reports which are collected by central banks and regulators worldwide, and sometimes they're contained in different jurisdictions. Now, some of this data can also contain unformatted data, language notes, We can think about some of the notes in the annual reports of Silicon Valley Bank, as it was discussed 2 weeks ago. So AI can also help of making more sense and in faster and cheaper ways of the huge data sets that the central banks and supervisors are collecting to get a point-in-time understanding of the situation of the financial system. But the second, I said, is about trusted and granularity of data and openness across ecosystem. So the second place where AI can add more value in terms of better information is the one that I care the most in the discussion today. In 2009, you might remember, Alan Greenspan was asked by the Senate committee for a public hearing, and the Senate committee asked him why the financial system was collapsing. And Alan Greenspan basically said with radical candor that he found a flaw in the system. Basically said agents are not rational, and the way the expectation of efficiency has been created does not correspond to reality. So basically said he was concerned because he worked for many years, but it's not working anymore. So now this is the problem. A lot of knowledge we have today about the functioning of the economy and financial markets is based upon a modeling of reality, which may not be sufficient given the current conditions that correspond to higher uncertainty and different ways of interacting, leveraging technology. So there are two ways where AI and machine learning can add value here at the highest level of supervisory and central banking action. First of all, is the possibility to improve modeling of reality with new data. In essence, it might be complex to understand how rising inflation affects the behavior of the households, but now there are many data points available in the private community that could be shared with the public sector in a way that policymaking can be better fine-tuned to the effective transformation of some of the decision-making processes in terms of what happens in the real economy at the micro level. But also, there is also the possibility to improve the modeling of reality with agnostic understanding of what the drivers are. We all know that when we build financial models and economic models, we plug a lot of assumptions inside these models. And sometimes the result of the model is the self-fulfilling prophecy of the assumptions we had at the very beginning. Now, machine learning has the capability or the opportunity, when well conceived, to reduce the level of self-referentiality in the creation of a model, basically reducing the dependency on ex-ante assumptions by looking at the data in a more agnostic way, which might reveal realities or relationships in the platform interplay of the real economy and the financial system that cannot be revealed otherwise. So that we said, intensifying the information quotient in order to add more value to the action of supervisory and central bankers, but also intensifying the communication quotient to make them even more relevant. Now, this is where I see some central banks looking at AI in terms of creating more homogeneity in the way they interact with the financial system and the regulated entities, for example, by checking the tone of conversations and papers and discussions, leveraging artificial intelligence and natural language processing, but also the importance of the evidence-based communication, so being capable of explaining the complex relationships that intersect policymaking and what happens in the reality in a way that what is discussed with the market resonates way more and contains more clarity, as clarity is definitely needed at times of uncertainty.
Thank you very much indeed, Paolo. I'm conscious that we have started our panel sort of in the sunlit uplands, the potential, the benefits that AI and machine learning can bring. But it would be remiss of us, I think, and very much building on what Eric Thedin said in the last panel, if I can paraphrase, rubbish in, rubbish out, if we don't have a little thought conversation about some of the limitations and maybe misconceptions about the role that AI and machine learning can play. And I was really conscious of your point, Daniel, about really providing the kind of human context for us. You know, there's a lot of conversation about AI and machine learning. Some of it's kind of pretty futuristic and sci-fi, but can you talk to us a little bit from your perspective, particularly with that research, that blend of research and commerciality, what you think some of the common limitations and misconceptions are around at the moment?
So, well, let me first say something that might be, I don't know whether controversial or not, but we know that humans are noisy.
Yes.
We are extremely noisy. And there's a recent book by Daniel Kahneman and his co-authors on basically understanding that we are biased machines, and we are not fair, and we are not consistent in our decisions. So we are trying to, when we analyze how AI and machine learning are providing tools for us, we are trying to put like higher standards than what we are putting when we are evaluating humans. So first I would say, I enjoyed a lot the conversation yesterday on the ethical issues of AI, and I think it's a key component of AI that it has to go together with a continuous evaluation from the point of view of ethics and all the related topics, fairness, bias, and so on. So that's the first point. The second thing is that since I joined, I was an academic, as you said, and then I joined JP Morgan. And one of the things that I found, I've always been obsessed, I don't know whether that would be the word, by the integration between, on one side, the knowledge that we have as humans on solving tasks, and at the other end, using data in order to improve the decisions that we make over time. So it was very interesting to me to observe that when I went into a company, and I'm sure that would also happen with central banks or any other organization, we have these two ways to reason about. One would be based on knowledge that we have accumulated as humans over time, and we have a lot of that in all the organizations. And on the other hand, we have data that is providing us with hints on reality, on what is actually happening. So if we are able to capture the integration of those two worlds, I think that we are going to improve a lot on how things are done. So limitations right now, for instance, from the point of view of knowledge-based systems, is that they are very, they don't deal with well with an uncertainty. And in respect to data, just to mention one of the limitations that we have already seen in the latest advances is that, well, right now it's called hallucination, or it's basically, sometimes people say also they are lying, all these systems based on data, but it's basically trying to control the output that they generate, because sometimes they make up things that they do not exist in reality. So how to, as I said, I look at it from the point of view, not so much on the limitations, but on the future and how to move forward, which is integrating both worlds. Knowledge to help data, and data to help knowledge.
Thank you. Paolo, is there anything you'd like to add to that? Anything that you particularly heard from Daniel that you want to expand on or add to?
Well, I can start from a personal story. I used to be head of quantitative risk management in capital markets institutions before the global financial crisis. And at the time I worked with many, I would say, romantic in finance, looking at the latest figures in the output of a financial model. And now I work in technology with a lot of fintech innovation folks, and I also find a lot of romantic in technology, believing that technology is the solution of all the problems. The reality is always, if you like, in between. But this parallel is important because we talk about AI and ML in terms of the prowess of the algorithm, what the algorithm can do. But the algorithm doesn't live in an abstract world. It's nurtured and fed by data. And that's where we see that the data architecture is even more important than the AI architecture, because the framework is needed to create accountability in every decision-making process, being totally human or intermediated with technology. And accountability is based on transparency, robustness, and explicability. So I'll give you this example. Before the global financial crisis, there were, I believe, two types of institutions. Those that were excellent in hiring talent to create the most sophisticated financial models ever you could possibly conceive, which, however, had the problem of not being capable of standing the reality when perturbations happen in the market, they cannot be calibrated, they become completely useless because they don't correspond to the shifted of the reality that when happens very fast. And those are the institutions that seem to be most proactive and advanced, but are also those that failed or got into trouble faster than the others. And then there were other institutions instead that were a bit more sober in terms of working on the analytics, but spend time in creating a holistic framework that enabled them to relate to the various aspects of the capital allocation in a way that they would have been able to draw insights, even imperfect insight, but understand the source of the insight and therefore the action that could basically lead them into a remediation process. And these are actually the institutions that seem to be a bit less shining before the crisis, but are those that resulted a bit stronger out of the crisis. And I think that this is a good example for AI as well, because regulators learned well the importance of creating sensitivity analysis to understand how modeling, risk modeling, capital adequacy framework would react in terms of shock to market conditions. With AI, it's basically the same thing. When you build a consistent data architecture, you allow the analysts, the individuals, the management, and even the board to basically understand in sensitivity where the indication comes from, what would happen if the conditions are different, so that there is a better way of controlling the machine. There is not a black box, but it's something that you can relate to. And this is absolutely important, because the moment AI takes over and is becoming more and more important on the digital economy, especially as we enter into the platform economy that requires non-linear interplay among the agents, which is a very complex system, the level of accountability of an automated system is evaporating at the level of the first line and moves up at the level of the board. Therefore, building data architectures that create a framework for the development of AI to be done in a way that you can be accountable, transparent, robust, and explicable is of utmost importance for the CEO of the institutions and the board management. Now, I suspect that ChatGPT is not accountable enough these days.
Paolo, thank you. And I'm going to take particular pride that we're talking about romance in the space of AI and machine learning. I don't think anyone might have predicted that ahead of today's session. Daniel, we've talked a little bit about, and Paolo talks about this just now. He talked about talent. He talked about kind of, you know, the blend of skills. We've also talked about the pace of change. You know, how, in thinking about how the central banking community, the wider regulatory community can harness the use, you know, that AI and machine learning brings, what would be your perspectives? And I'm particularly interested in your experience here of the academic and the commercial experimentation around how central banks can harness that capability, that skills and talent profile that we know is absolutely essential in being able to build upon that granularity of data to realize that opportunity.
So I don't know if I have a good answer to that question. So first of all, let me talk from the point of view of my organization, and I don't know whether that could help other organizations.
It will inspire, I'm sure.
Okay. So in the case of JP Morgan, we have plenty of what they are usually called applied AI ML teams. So that means that there is plenty of short-term projects that are going on within the business that have to be solved right away. And you can see it with many of those teams. They just take care of daily operations of the company in terms of AI. So in my particular team, we are AI research, which is very unusual for a financial institution. So the goal there was to create a team of researchers on AI that could help us on transforming the business in the medium long term. So this is a model that, at least from what I've seen, and obviously I'm part of it, so I cannot see it from the inside, but it has been acknowledged from the outside with some recent evaluation, that it's working well. So we are in charge basically on trying to understand how the business works right now, what are the main challenges that it has, and we are trying to provide ideas on how AI can transform the business over time. And also that helps a lot, not only on understanding how we can improve over time, but also how things are done right now and also helping humans understand how they are making decisions right now. In terms of talent acquisition, we have the same issues as many other companies. AI talent is scarce. The type of talent that we try to get into our team is mostly based on PhDs and master's students, which is a very selective pool of people that we can attract people from. And obviously, we have a lot of competition with the main tech players. So that's all I can say. I would say nowadays I wouldn't understand any organization, especially big ones, without a dedicated AI team within them. If they have the opportunity to have a research team, that would be great. But otherwise, I mean, I still would like to talk with the 5% of people that think that AI is not going to be a disruptive technology in 2030 something.
Maybe you can find them in the coffee break.
Okay, yeah, sure. Please come and talk.
Paolo, if we can just, to use a colloquialism, pull on that thread a little bit and get your take on how you think AI and machine learning-based tools can be used to foster that sort of effective collaboration and cooperation on regulatory issues. We heard it so powerfully in the previous panel, and I'm really interested in your take on how you see them as a vehicle for enabling that cooperation and collaboration.
Yes, that's important, and I will start with a provocation. In the recent Global Outlook for Banking and Financial Market research paper that I published as the IBM Institute for Business Value, we had a very strong statement. We said that the next financial crisis might not be financial in nature, but operational. It's operational, it's about technology. Now, bankers typically move slow. They moved very fast a couple of weeks ago. So maybe they changed the fate of this sentence, but effectively, we all know that banking is becoming more and more interconnected and therefore is exposed to a higher number of vulnerabilities. Think about cloud adoption with the concentration of the cloud providers, as well as the potential of the CBDC to be a new infrastructure for the management of entire economies and across border, with a lot of connecting points that are supposed to be operational at all time. Now, this is not a problem that can be resolved by financial institutions individually, although, of course, they need to invest into their own security and resilience. It's an industry-wide problem that can only be resolved with better collaboration. We interviewed for a previous research 2,000 CIOs and CTOs of financial institutions worldwide and asked them where they would invest the money, if they could choose, in order to improve their institutional capability to interact within a broader ecosystem made either of partners or clients. And the number one choice that they indicated is the need to collaborate across ecosystems in order to resolve the problems of security in terms of KYC, anti-money laundering, fraud detection, because these activities are strategic for an institution, but they're not really the differentiating element in front of the client. The point is that only accessing data across the entire ecosystem, which are banking and non-banking, and applying AI on top of that, the quality of these analytics can basically better address the new challenges and threats that the financial system faces. But there is a problem. Again, it's not just about technology. There are today encryption mechanisms that allow a more secure sharing of data across ecosystem and different parties. But what matters to make this collaboration effective is to find the right governance model. Christine Lagarde was also talking about governance yesterday when she spoke about the complexities of CBDCs, especially when they go in the cross-border world. So I guess the supervisors and central banks have the needed interest and authority to facilitate and foster a governance model for the collaboration within and outside the financial system, so that AI can basically create and unlock more value in the interaction with complex data sets that cannot be contained inside the individual silos of an institution, but needs to be shared across the entire ecosystem.
Paolo, thank you very much indeed. We have come to the end of our session. The time has flown past and we do not, unfortunately, have time for questions. But I wanted to thank you both very much indeed for sharing your insights, your expertise, and really building on this golden thread that has run through the last 2 days on the role that AI and machine learning can play. And Daniel, if you can find those people who believe that it doesn't have a role to play, let us know, because I think it's interesting. But thank you very much indeed, and please join me in thanking our panel today.
Thank you. Arrivederci.